By knowing the structural levels inside the charts that you put money into, you can figure out where the sellers will come in and seek to push price down. And we saw at the 98,800 level that we talked about in yesterday's video, the sellers were very active. On Bitcoin, Bitcoin is currently trading at 97,895. We'll need to look at the cheat sheet in order to understand, is Bitcoin going to come through this negative CTKS gap and get supported by the buyers at 96,100? Or could it come down to the 92,640? Or is it going to come up through this 98,800 and hit that mythical $100,000 and go beyond that? All markets are intercorrelated and interconnected. Let's run the numbers. There's a hidden secret within the crypto market that our community knows very well of, but unfortunately a lot of other people don't. Total crypto market cap and Bitcoin influence each other's charts. To understand why Bitcoin just leveled out there and where it could be going to next, we need to look at total crypto market cap in terms of its levels, its structural levels. So let's pop on the indicator. Now, what are we seeing here? At that 3.18 trillion, there's a lot of structure. And we saw that Bitcoin and the total crypto market capitalization came up to that $3.15 trillion mark, just clotheslined along there before coming up to the 3.17 and weakening. Now it's got back up above the 3.17 trillion. Now note this positive CTKS gap. We've had a flight to safety into Bitcoin recently. Now the alts could start to really party, at least until the $3.31 trillion mark. If we get bullish price momentum, if we get bearish price momentum, we've got levels of structural support underneath price, which is a really good thing to have. We want those levels. The question becomes, where is Bitcoin's chart going to? Well, the answer is not in Bitcoin and it's not in total. It's inside the cheat sheet. The cheat sheet has 7 rows. Row 1 and row 2 measure risk on and risk off activity. Bitcoin cannot escape the stock market's gravity, so that's why we look at row 3 and row 4. Then we get into the crypto market from row 5 down to row 6 and row 7. Row 7 is really important because it shows if there's weakness or strength, but the key line we look at is, of course, row 5. All roads lead to row 5. At the end of yesterday's video, I said please keep an eye on the futures, and if you did so, you were very fortunate because you made a lot of money. When we saw that the Nasdaq and the S&P 500 was weak, but we also saw it recovering. That meant the probability was there that Bitcoin and the entirety of crypto would eventually come up. And we've seen that inside not only the S&P 500, the Nasdaq, the Russell, and the Dow. The real issue for us is this going to continue upwards, or are we going to get a deeper retracement? These are the kind of questions that the cheat sheet allows us to answer. This is institutional grade knowledge. It does take a while to unlock the power of the cheat sheet, and that just means that you need to do constant repetition. Row 1 is the VIX, the US dollar currency index, or the DXY, dollar-yen combo, the 10-year yield, the 2-year yield, and oil. The power of the cheat sheet is to actually stack probabilities. And what did we see in the last trading session? The VIX spiked up and then spiked down. What did that do to crypto? Well, as the VIX was spiking, it brought the crypto market down. But as the VIX decreased, it brought crypto up. You can see that Bitcoin's price momentum is not just confined to Bitcoin's chart. That's already giving you a huge amount of power. We can also see that the DXY has been strengthening, dollar-yen strengthening, the 10-year strengthening, the 2-year strengthening, and oil coming up. This is pointing towards the VIX may be starting to break out again. This means that we need to be wary of the next 24 hours, but we need to also stack probabilities. We're not done yet. Having the SLs gives you so much confidence and it gives you certainty as to where price is going. And I'm so happy that I'll be meeting so many of our incredible community at the Sydney event. If you're up in Sydney from the 23rd to the 24th of November, please let me know. You can always directly message me on X/Twitter. Row 2 measures risk-on and risk-off behaviour through junk bonds, the Eurodollar, the Aussie dollar, gold, silver and copper. When I look at Row 2, I see a definite flight into safety. Now, Ken, how do you see that? I just see 6 random-looking charts. Okay, let's break this down. We know that gold and silver move together except under flights to safety. One of the things you note is that silver is coming down because the US 10-year and the US 2-year is coming up, as well as the DXY. Also, we noticed basing behavior in the VIX and a potential positive price momentum, and this is getting reflected into gold at the current time. How do we triangulate this? We look at junk bonds. You can see here that as junk bonds came up, it rallied the entire crypto market, well, especially Bitcoin, and things did turn around. And if you caught my post on X about Ethereum and the way that that could move, you probably made quite a lot of money yesterday. So congratulations if that was the case. Now let's have a look at the junk bonds and what is the signal that it's telling us? It's telling us that the VIX is actually potentially going to break up to the upside. This is also saying that there was potential negative pressure inside the markets that's going to continue. The fact that the Eurodollar has broken down means that the DXY was incredibly strong. What is Row 2 telling us? It's telling us beware of a risk-off wave. We know that Bitcoin cannot escape the stock market's gravity. That blue line here on Row 3 is Bitcoin. And what are we looking at? The S&P 500, the Nasdaq, the Dow and the Russell. And what are we seeing here? Bitcoin's gravitational pull is playing out to perfection inside the stock market. A lot of people think that crypto and the stock market have decorrelated. No, they haven't. They never have. What about the Nasdaq? We've seen that it came down and then went up, but there's a degree of negative price momentum, and you can see it here because we're actually making lower highs. The S&P 500 is not doing too badly, but it did curl over. When we look at the Dow Jones, the Dow has been doing really, really well. The Russell 2000 is important for us to look at because it is highly risk sensitive. It is doing a bit of a pullback at the current time. So if we come back to that 2350, that would be a retail area where people would seek to buy the dip. And if junk bonds does a turnaround and the VIX ends up coming down, well, that could be a really good buy. We need to stack probabilities, and I'll give you a very good window into where things could go as we progress. If you're liking the content so far, please smash that like button and don't forget to subscribe. And if you're new, a very warm welcome, and welcome back, CTKS family. A lot of people inside the crypto market will say you don't need to look at the stock market. For example, that blue line is Bitcoin. When the S&P 500 is coming down, Bitcoin is rallying. Oh, no, it's not. It's following the S&P 500. Oh, but when the Nasdaq comes down, the S&P 500 is coming down, but Bitcoin is going up. No, it's not. What about when the Dow goes up, Bitcoin goes up? Yeah. What about the Russell 2000? When it goes up, is Bitcoin coming up? Yeah. When it weakens, is Bitcoin weakening? Yes as well. This will give you a tremendous degree of certainty by stacking probabilities. Stacking probabilities does take a little bit of time to do, and in the Profiting from CTKSmethod course that you can get absolutely free of charge, the link is in the description. I'll be discussing a lot about all of this stacking of probabilities. It's very important. In Row 3, we look at the major market indices. In Row 4, we look at the subcomponents, which is Apple, Tesla, Microsoft, and Nvidia. Is Apple, for example, is it gaining in strength? No, it's not. What about Tesla? Is that gaining in strength? No, it's not. What about Microsoft? Is it gaining in strength? No, it's not. So when we stack probabilities across these top names, we can see there's a bit of a problem. We could be in line for a bit of a pullback, but we'll look at structural levels later. What about Nvidia? Well, that doesn't look too bad, except it's making lower highs at the current time. If you follow me on X and StockTwits, I am starting to post these kind of levels out just to give you a bit more insight into the market. If you're solely into the stock market or commodities but not into crypto, that's completely fine. But you should be realizing right now that that blue line, which is Bitcoin, can give you an insight into what is happening inside the main markets, because Bitcoin and crypto trade 24/7. I used to just be concerned pretty much with gold trading. Of course, a degree of stock trading too, but I love gold. And hey, what's not to love? I was brought into the crypto market by the concept of digital gold, and it is really, really good stuff. So when we look at crypto total market cap in row 5, as well as Ethereum, Bitcoin, and MicroStrategy, what are we seeing inside the crypto market? We just previously looked at the structural levels, and we know total crypto market cap is actually very close to a structural bounce from a positive perspective. This means that it should come in and support Bitcoin at the current time. The other thing to just bear in mind, please make sure that you look at the futures indices of the S&P 500, the NASDAQ, the Dow, and the Russell at the current time. They're really quite important. Now, why are they important? And well done for everybody who correctly answered in yesterday's video. One of the reasons they're important is that the futures give us an insight into what the VIX and junk bonds are doing. That's why you're looking at the futures, if you are doing so. We had a very interesting situation with Ethereum in the past 24 hours. I put out a message on X and StockTwits, basically saying that ETH is around that 3,100 mark. It is getting ready to blow out. And I put a target of $20,000 for this bull run, and I firmly believe it. Firmly believe it to the point I'm putting money on it. So it's a thing I'm not taking lightly. But if you got into Ethereum just after I basically put that out, you would have seen that it just went absolutely nuts. And I expect future very positive returns to come from ETH. But always be aware, don't FOMO, just look at the structure, and we'll look at structural levels on ETH in a minute. Because price is always coming up and down. And also, note this, that Bitcoin was coming up while ETH was staying very, very static. There's a lot of shorts inside Ethereum at the current time. In fact, there's so many shorts, it's undeniable. And that's exactly what's going to fuel the 20,000 ETH over time. The post that I put on X and StockTwits was basically, you remember when ADA was getting suppressed and everybody was so bored about ADA. Oh, ADA goes nowhere. I don't understand ADA. ADA's not breaking out. ADA broke out. ETH will do the same. If you know your SLs, the Stanfield levels, on any specific chart, it will just take you to the moon and back, because you'll understand where smart money is buying and selling. One of the things that we can see here, MicroStrategy should have inherited Bitcoin's power, but it did not. The sellers came in and crushed it down. Now, this is actually pointing to a weakness inside the main markets, which is confirming our opinions of stack probabilities on row 1 and row 2. That is, a pullback is in order. Row 6, inside the cheat sheet, is Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic. Now, what do all these tell us? Litecoin and Bitcoin Cash give us an insight into the power, strength, and direction of Bitcoin's rally. So far, they've got a bit of a divergence, which shows us that the potential for a pullback is in order. And you can see Bitcoin Cash rallied like hell, and then it's been retracing ever since. This rallying like bananas and coming back is a common thing inside the crypto market. One thing that is really, really good, retail is coming back to the centralized exchanges, and we see that through Binance Coin. When you look at a chart, try to see through it to what it's actually telling you. Ethereum Classic is telling us something about ETH at the current time. Ethereum Classic rallied when ETH did, and also that rally got pretty much faded. This is showing the power of the cheat sheet because you already know row 1 and row 2 are favoring a bit of a pullback at the current time, and that's what we're seeing. Please make sure that you keep your eyes on the futures. Row 7, we're diving deeper into the crypto engine, looking at ADA, Cardano, Solana, Dogecoin, and XRP. We note that Bitcoin was coming down, just did a bit of a rally, tried to get up to 100,000 but was knocked down. And what have we seen here inside ADA? We've seen a bit of a retracement, but ADA's starting to show signs of life. Well, pretty nice stuff. What about Solana? Solana did very well. You can see it's been following Bitcoin's gravitational pull. Well, we know no oak can escape Bitcoin's gravity. If you know the rule number, please let me know in the comments. And well done if you do. Looking at Dogecoin, a lot of people don't like memes. I think this is a major mistake. The memes have incredible liquidity. And when I mean incredible, I mean incredible. Liquidity and volatility are two of the things that traders absolutely love. So just bear that in mind. The memes are not problematic, and they're the gateway for retail or new investors and traders into the crypto market. We can see a bit of a weakening in this trend. Okay, XRP, we can see it flatlined, kind of like ADA, or kind of, I should say, like Ethereum for some time, and then news of Gary Gensler getting booted from the SEC. What a great day for crypto. All I can say is good riddance, Gary. We've been wanting you to be fired for a very long time. When you're stacking probabilities, if you're doing it correctly and looking across a great degree of charts, which is what you need to do to stack probabilities, you're seeing that ADA is starting to come alive. If it continues to do so, this is pointing to upward price momentum inside total crypto market cap. You want to look through the charts. It is and does take a while. It's a little bit complex at the start, but you'll get there. I know you will. I believe it's vitally important to track the memes because the memes are the gateway for new investors and traders inside the crypto market. Inside the service, you have Dogecoin, but I'm going to bring out a course which goes through the memes and provides the levels on all of these. For example, SHIB, Pepe, WIF, Bonk, and Floki, and under extended circumstances, but doesn't do the 3D price paths. And that will be 12 months access to those TradingView indicators. So let's have a look at Dogecoin. We see Dogecoin was selling off when Bitcoin was selling off. You can see that blue line here. The thing we want to bear in mind is how are the memes reacting as Bitcoin is coming up, and we know there was a flight to safety in Bitcoin in the past 24 hours, just like there was a flight to safety in gold. But what is weak and what is strong? We see that Bonk was literally moving in accordance with Bitcoin's gravitational pull. Floki was doing fairly well, but look at WIF. WIF was very, very weak, and we saw Pepe was also weak. Doge was weak, and also SHIB was incredibly weak. SHIB is on the Ethereum ecosystem, so if ETH starts to really rock and roll, expect SHIB to outperform Doge. If you would like to share the Bitcoin levels, please take a screenshot, and you're welcome to share it anywhere, any social media or anything you would like to do. If you would like to put in the hashtag #CTKSmethod, that would be awesome. And if you're posting on X, just put my Twitter handle in @StanfieldKen, STANDFIELD, 2 Ds in Stanfield. Ken, just as one word, and I'll repost it for you to give you some more views. Now, at the current time, we can see that Bitcoin is losing that level of structural support. This is favoring a negative structural attraction to 96,100. And this is just going part and parcel of what we've seen inside row 1 and row 2, and also a variety of the other rows that we've been looking at. A retracement isn't a problem because we know where the structure is inside the price chart. And we love buying $1 for 90 cents or even 80 cents. Wow, what a bargain. If you would like to take a screenshot of total crypto market cap, we can see that we're coming into structural support, literally just a little bit below where the entire market capitalization of crypto is at the current time, which is at that $3.18 trillion mark. We expect a reaction here. If it doesn't react and underside retest, we expect Bitcoin to go down. Please be aware of this. If you would like to share out the Ethereum levels on social media, here they are for you right here and right now. You can take a screenshot if you would like to repost. ETH is going to have a degree of trouble overcoming that 3400 level of structural overhead resistance just here. Now, when it does it, explosive moves to the upside are almost guaranteed. One of the things that I love about SLs is they give you absolute certainty as to what price is going to do at certain levels, where it will come up to and where it can go down to, where it's going to encounter problems and where it's going to rally from. It is absolutely unbelievable. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.